Welcome back, investors. Jake here. Today's video is going to be difficult for me to make because I'm announcing to you that I will be shorting the markets. I don't really want to do this, but I don't know how else to make money in the short term if I'm pretty confident now that the market will be going lower. Every week for you on my channel, I've been charting the S&P 500 index. The market peaked pretty much in November of last year, and when you look at this technical chart, this downtrend, there are 1, 2, 3, 4, 5 points of contact in this downward sloping channel. Where do I think this is going? When do I think the market will bottom out? And I don't think it's going to happen until we're well below the 200-week moving average. This is the 5-year chart of the S&P 500. And this purple line is the 200-week moving average. It's the last technical barrier that any large institution, technical trader, or computer algorithm is possibly looking at as a line of support for the entire market. So currently, the 200-week moving average is at about 3,500. The S&P is about right here. So I think over the next 2 or 3 months, we're probably going to fall below this level before large funds start buying back into the market. And I think that potentially over the next week or two, the markets could see a bounce as there might be a small rally. But I think July is going to be a bloodbath for the stock market as we're heading back into earnings season. Apple, the S&P 500's largest company, reports their earnings on July 25th. This is the same week usually as all the other big tech stocks report, like Google, Microsoft, and Amazon. And I think for the big tech companies especially, their year-over-year comparisons to 2021 aren't going to look good, and their next quarter guidance for Q3 is either going to be very soft or very weak given rising interest rates. I also think the biggest problem for the economy is inflation. According to this CNBC article, they don't think inflation will be under control for another 2 years. I'm not quite this pessimistic. I think potentially by next summer, interest rates could be back, or inflation could be back under 2%, allowing for the Fed to lower interest rates for the market, which would definitely give it some relief, give it a boost. But inflation is a huge problem, and I think it's entirely related to the war between Russia and Ukraine. I don't really understand why other finance YouTubers aren't talking about the conflict between Russia and Ukraine, because this is greatly affecting commodity prices, energy prices, and soon to be food prices around the world, which is definitely driving up inflation and causing interest rates to rise, which is hurting economic activity. And when this war broke out in February, you can go back and look at my videos, I was pretty hopeful or optimistic that the Russian people would rise up and kick Vladimir Putin out of office. There was good precedence to believe that potentially Vladimir Putin's grip on power in Moscow would be loosened, but it's just not happening. In Russian history, the government in Moscow has already collapsed twice: the 1917 revolution and the 1991 collapse of the Soviet Empire. There's been lots of coup attempts either on Boris Yeltsin, Gorbachev twice. Khrushchev was actually removed in a palace coup. So there's lots of precedents in Russian history that when a strong man fails to lead the country well, Kremlin insiders will just arrest him or assassinate him. But Vladimir Putin is holding on to power mostly because he's done such a good job of controlling state media and consolidating his power the last 20 years. But the number one reason why this war is still going and Vladimir Putin is still in power is the price of oil. As long as I think oil is above $90 or $100 a barrel, then Russia is still bringing in enough money and revenue to fund the government, pay off Kremlin insiders and supporters, and fund the military and their effort with the war in Ukraine. So the price of energy, the price of oil has to come down. Russia's ability to sell their oil around the world also has to be greatly diminished. And the Ukrainian government, the Ukrainian military, they know this. I watched this video this morning, and this is pretty alarming, but there's video of a Ukrainian Kamikaze drone flying into a Russian oil refinery. This is deep into Russian territory. This is not near the border. So Ukraine knows that to have a chance in this war, they have to cut off Russia's oil revenue. So they're now deliberately targeting the energy infrastructure in Russia to give themselves a boost. If you want to go online, you can find this Kamikaze drone attack. It's pretty interesting. Additionally, this week there was a drone strike on an oil rig in the Black Sea off the coast of Crimea. This used to be a Ukrainian oil rig until 2014 when Russia seized Crimea. They also took control of this oil rig. Once again, Ukraine is just becoming much more emboldened and aggressive, going after Russia's capacity to pump and export oil. The other crazy alarming thing is the global famine that is coming later this year. The grain and food exports for Ukraine usually feeds around 400 million people. In the Black Sea, Russia is deliberately blockading Odessa so that Ukraine can't ship their grain and food exports out. Additionally, this woman, this is a Kremlin propagandist, she just openly said what Russia's plan is, and it's to artificially create a global famine so that the West will give up on their support of Ukraine. She phrases it much nicer, saying that if we just starve the world, then people will want to be Russia's friend again. Because Russia has all of Ukraine's grain in the occupied territory, they still produce plenty themselves. It won't be Russians in Russia starving to death. It'll more than likely be citizens of the Middle East and Africa and potentially other parts of the world. But this is going to cause food prices everywhere to spike. This is Russia's plan: economic warfare against the rest of the world until they capitulate and give Russia what they want. So for everyone in the comments section saying, I don't care about Ukraine, I care about $6 a gallon gasoline, or I don't care about Ukraine, I care about rising beef prices. This is exactly Russia's plan and Russia's attempt to get the West to give up on their support for Ukraine. There's a really interesting video I just want a quick share of all of the grain that Ukrainians grew last year being stolen by the Russians and then being sent to Syria, which is a Russian ally. So Moscow, the Kremlin, is currently being run basically by the Russian mafia. This is their tactics. This is not a legitimate state with legitimate, sovereign goals. The agenda for Moscow is famine, looting, and stealing, and Vladimir Putin wants to expand his empire. I've made the argument for you. I've made lots of videos talking about it. I don't see the global economy and specifically the US stock market performing that well over the next couple months. So in this video, I'm going to be buying puts on the Nasdaq. Now, when I show you the heat map for the markets, this is the S&P 500, the 500 largest companies represented on the New York Stock Exchange. This is Finviz.com. This is the heat map showing their performance over the last 6 months. And I don't want to short the S&P 500 because there's still lots of sectors in the S&P that are doing pretty well. Healthcare is green over the last 6 months. Defense stocks are green over the last 6 months. Oil, gas, energy, as well as consumer defensive. So if you are thinking about shorting the markets, it's much better to short the QQQ. This is Invesco's QQQ, which is the index fund for the Nasdaq. And this is the top 10 holdings of the QQQ. Apple, Microsoft, Amazon, Tesla, Google, Nvidia, Meta, Pepsi, Broadcom. I think between maybe these top 10, this has to be close to 30 or 40% of the entire fund. But the fund is made up of sectors that are more vulnerable to rising interest rates from the Fed. So we've got information technology being 50%, consumer discretionary being 17%, consumer staples 5%, industrials 4%. It's mostly these two that are going to hurt the most over the next 6 months and cause the market to sell off more. It's probably not going to be oil and gas, probably not healthcare, probably not defense stocks. So here is the 5-year performance of the Nasdaq, the QQQ, and we are heading for that 200-week moving average line. We haven't quite gone below it. Where do I see the Nasdaq potentially panic selling off to over the next 2 or 3 months? I don't know, maybe 230, but I'm feeling pretty confident about it getting below 250. Here's the trading charts on TradingView.com. It's a similar down channel, except a little bit more steep compared to the S&P. But this is pretty strong. I'm feeling pretty confident we're going to go lower. So let's now go into my active trading accounts. For those of you who have not been subscribed to my channel and following me the last 2 years, I mostly just buy and hold index funds in my 401k, my IRA, my Morgan Stanley, and my Fidelity accounts. That's all I do. But in my Schwab accounts, this is my YOLO, let's have some fun, see if we can outperform the market account. And the history of this account is going back to January of 2021. I deposited $25,000, and I've not added any money to this account. I've just been trading options mostly, and I did pretty well in 2021 as the market only went up. But as soon as the market started going down, I started becoming decimated. So my year-to-date performance for 2022, I'm down $34,000 or about 57%. Now, a lot of this was unrealized gains as I was holding contracts that were up huge that have since turned negative. But yeah, I started 18 months ago with $25,000 and I'm currently at $25,728. So I think I've underperformed government bonds. So let's buy some puts on the QQQ today. And if you have no clue what buying a put means, I have a playlist explaining everything you need to know about trading options. It's 49 videos. If you want the one buying put options explained, and then I have several videos where I do examples in Fidelity, Robinhood, and Charles Schwab. So here's my active trading accounts. I basically blew it up yesterday and liquidated everything as I feel like, once again, a drop is coming. I'm not going to sell HCI. I'm not going to sell Aero Environments. And my call contracts for Meta are basically worthless. Cost basis $7,700. They're currently only worth $85. If I sell to close these, I lock in that capital loss of $7,000 this year, which I don't want to do for tax purposes. So these don't expire until January 20th of next year. I'm going to sell to close them in January of 2023 to lock in a $7,000 loss for tax purposes for 2023. So I don't want to realize this capital loss yet. However, I am down significantly. Same thing with HCI, negative 6,221. For tax purposes, I don't lock in that loss until I sell these shares, and I just don't think I'm going to sell these shares this year. All right, so let's go to the option chain for Invesco's QQQ. These are the options chains for the QQQ. First thing we have to do is choose an expiration date, and I'm going to go with the third Friday in September, which would be September 16th. Just looking at the S&P 500, once again, I think this downward channel is going to continue. Lots of heavy selling in July or August. I'm going to choose the expiration date in September, but more than likely I will sell to close these contracts if they're profitable sometime in August. So I'm choosing the expiration in September just so it's a little bit farther out. Let's go ahead and expand the strikes, and we're looking on the right side. This is the put side. Now I could go with, let's see here, 280. That's basically at the money. We're seeing the bid ask be 1671. That's 1,671 per contract versus 1678. I could do 275 for a little bit better price. I'm actually going to go with 275, so I'm going to go ahead and click on trade. So here's the trade window in Charles Schwab. Once again, I'm buying a put on QQQ, expiration date September 16th, strike at 275, so this contract will start being in the money once the QQQ falls below 275. And I'm going to be buying to open. I think I'm going to do 3 contracts. We'll switch this to market order. It's giving me an estimate of 4,425. Currently in my active trading accounts, I have $15,000 in cash. I don't want to go all in this week today. I want to slowly build up this position. I think it's still possible that over the next week or two, the QQQ could go back higher. When we look at the S&P, we're definitely in this new sideways consolidation range. The S&P can maybe get back to 3,900, but I don't think it'll go much higher than that before sellers start stepping back in. So I'm going to put $4,500 into puts on the QQQ. Next week I'll do another $5,000. The week after that I'm going to do another $5,000 to basically use all of my available cash to short the Nasdaq. How do I lose money on this trade? I lose money if this is the bottom. If all of a sudden we have a V-shaped recovery, Vladimir Putin is deposed, Russia pulls out of Ukraine, grain exports resume, energy prices stabilize, inflation goes down. I mean, there's a lot of miracles that need to happen in the next 2 or 3 months for me to lose money on this trade, but once again, in every video, I have to say there is no guarantees. You have to accept the risk. I am 100% willing to lose all of this money if I am wrong on my investment thesis. So let's go ahead and submit on this trade. And there we have it. I have 3 put contracts on the QQQ set to expire in September. I'm now down to only $10,000 worth of cash. Once again, next week, I'm probably going to buy another $5,000 worth of put contracts. The week after that, I'll do another $5,000. It feels really dishonest rooting for the market to go down to make money, but I just have been staring at this downward channel for 6 months and I just can't take it anymore, guys. All right, that's all for this update video. If you found it informative, give me a thumbs up. Really helps out with the channel. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.